Now, the delicate balance of the global oil market faces a critical test as the world's third largest crude oil importer. India sounds a warning. India's oil minister Hardeep Singh Puri has expressed concerns over the supply side management by OPEC Plus in recent months, suggesting that it could lead to demand destruction. Puri emphasizes the need for OPEC Plus producers to consider the consequences of their decisions as high oil prices strain fragile economies. According to the Indian minister, OPEC and OPEC Plus have collectively reduced oil availability by nearly $5 million per day, barrel per day, pardon me. That is equivalent to 5% of the global oil demand since 2022. And this reduction has had a significant impact on oil prices, driving Brent crude from $72 a barrel in June to $97 a barrel in September 2023. Puri underscores that these measures, while intended to stabilize the market, have resulted in unintended consequences. Hardeep Singh Puri's call for reasonable oil prices comes as Saudi Arabia and Russia, key OPEC Plus partners, announced their intention to continue oil supply cuts in November and December. Saudi Arabia will cut an additional 1 million barrels per day from its crude oil production, while Russia will reduce oil exports by 300,000 barrels a day until year-end. Now, earlier we spoke to UAE's Energy Minister Suhail Mohammad Al Marzrouri, regarding concerns raised by Mr. Hardeep Singh Puri, and this is what he had to say. Listen in.
Well, the India-Middle East Economic Corridor proposed at the G20 summit in India has garnered significant attention. Well, how do you envision this corridor impacting regional and global energy dynamics, and what role do you see UAE playing in this initiative?
We are all excited about this project. India is growingly becoming the top 5 and hopefully climb the ladder in terms of some of the largest economies in the world. Linking with India is very crucial for us. We are probably the biggest trade partner with India. And after we have done the CEPA, we noticed a 20% hike in the bilateral trade between us and India. All of that gives us assurance that tying up the energy market and hydrogen market in India, with India, and electricity market will provide an unlimited opportunities for the companies, private sector, industries, to prosper. We have a different cycle of demand than India. For example, in the winter, we have probably 50 to 60% of our resources in the electricity sector unutilized. So that could be accessible to the Indian market. We are also thinking of not linking only with UAE and Saudi Arabia, expanding that link with ultimately to Europe. Then we are providing an international energy stability corridor that is going to benefit so many countries, and it's going to reduce significantly the CO2 emissions. So we are very excited about that project.
Right, Minister. Now, India's oil minister Hardeep Singh Puri recently urged oil producers to be sensitive amid rising oil prices. My question to you is that how can India and other emerging economies navigate this threat of oil price increase and supply disruptions going forward?
First of all, we all care about the consumers, and we all care about the demand and the demand destruction by going to a higher prices. The biggest issue is the investments and the investment levels. And nowadays, the market is like that. 80% of the resource holders, be it in OPEC Plus, produce only 40% of the world supply. The other 60% is coming from countries with resources of 20% reserves. And the growth in these countries producing the 60% is always taking into account when we look at the supply and demand balance or imbalance. We are meeting later on this afternoon as an OPEC and OPEC Plus and we will be looking at the market. But I met with His Excellency. We heard him, and we hear him loud and clear. But we are not the only players when it comes to the supply. There are others who are also producing 60%. We're trying to communicate with everyone and ensure that we are balancing the market.